All right, shareholders, it is way too early on a Saturday morning, and this is the Saturday send out from the Simple Side. Again, check out our newsletter, thesimpleside.substack.com, or if you just Google The Simple Side, we should be the first thing to pop up. All right, let's talk about some upcoming newsletters. So we've got a new contrarian bet article coming out. We've talked about this stock before. Our paid subscribers have seen it, I think, a few weeks ago now. We're also going to be talking about our upcoming paid subscriber giveaway. This is the second giveaway that we've done. Our first one was earlier this year in, when was it this year? August? Anyway, we gave away $1,000 there. This time we're going to be giving away something like double that. So stay tuned for that. And then we are going to be releasing a market-beating model portfolio. This is pretty cool. It's kind of a strategy that I have seen and developed, and I'll be rebalancing once a year. So that's all that we're going to be trading in this portfolio, once a year rebalancing. And I'm going to share basically the previous returns and what we could be looking for in the future. And of course, if you're not a paying subscriber, you're going to need to be to see everything like that. And so go ahead and go paid to get access to it all. You can do so at thesimpleside.substack.com. All right, let's talk about what we've got down here in the weekly recap. I'm going to do a quick run through of everything today. So if this is your first time listening to the podcast, I would recommend going and listening to a previous episode. Any of them, they're all somewhat similar, just different reporting throughout the week. But this week we lost to the S&P. So we have not broken the trend of beating the S&P for 2 weeks, then losing for a week, then beating the S&P for 2 weeks and losing for a week. In fact, we've been doing that same pattern for 12 weeks in a row now. And this week we lost by 1.41%, which is a pretty hefty loss. I'm not happy about that, but you can only do so much. Our 12-week returns have come out to 10.11%. That's how much we're beating the S&P by. We're beating the S&P by 10.11. That's not what our returns are. That's how much we're beating it by. And our annualized returns based off of that beat are going to be 43.82%. So we're predicted to beat the S&P 500 this year by 43.82%. You can see the stocks that we had this week. We have our classic NANCKRUZ SURE lineup, and then our two other stocks, Google and PBF Energy, both performed poorly. So rough week for me on that one. We had Google get hit by an antitrust, and then PBF had an early week drop. And I guess if we would have bought in on Tuesday, we probably would have crushed the market, but we didn't. That's not how this newsletter works. We track on Monday and Friday trading. So you can see a little bit more about how our returns are performing relative to the market. Of course, we're up 12.16% in 12 weeks, which is just over 1% a week. So we're happy about that. That translates to over 52% returns in a year. So we're hoping we get there. Great performance by the politician tracking ETFs this week. And we have a sell opportunity, actually, coming from the politician trades. We saw Mark Green sell a massive stake in NGL Energy Partners. And typically I wouldn't call something like this out, but he sold between $500,000 and $1 million worth of stock. And so if you own this, I would recommend getting out of it. The stock is overvalued by as much as 50%, some of my models are saying. And so this is just not a stock that you want to be holding on to. Unless you have a firm belief that it is going to perform well. But in my opinion, I don't really have this as a sell opportunity. You can see the other 5 most recent politician trades. They're nothing special. All of them are from Miss Green, Marjorie Taylor Greene. I think that's her name. She's a Republican in Georgia. She doesn't have a great track record, so I don't really tend to pay attention to her buys too terrible much. We had an interesting buy in the insider trading report. We had Opali Management buy a stock at its 52-week high, Eton Pharma. I can't believe that they bought this, to be honest. It's kind of a surprising buy. Of course, they only put around $300,000 in, so for a lot of these management companies, that's nothing. But an interesting buy, to say the least. Moving on, we've got executive trading, and we've got a watch list stock here. We've got the CFO of Byrna Technologies buying 400% more ownership in the company than what they previously had. This is a massive, massive, massive ownership increase. The company's down 20% after a poor earnings call. And so then we've got a 20% drop, then a 400% buy-in by the CFO. There could be a massive, massive, massive opportunity here. Of course, with the volatility, I see this as risky, and so I've got it on the watch list for the next week. Not as a buy opportunity, watch list due to the volatility. And then down at the very bottom, oh my gosh, I have some great stuff in here for paying subscribers this week. I've got 4 companies that look like buy opportunities for the next week. I've got 2 companies that I have on the watch list. And then I've got 1 company on the sell list. So go, if you're not a paying subscriber, I mean, seriously, you want to check this one out this week. This is going to be great. I need to have a recovery from this week's poor performance, So I've got some analysis in here. I've got a 1-pager report that includes a profitability rank, financial strength rating, momentum ranking, growth ranking, and then some revenue increases in cash and debt, as well as showing the undervalue of the stock. And this is a great one. I think I'm going to roll into a long-term hold if it doesn't perform well, but definitely has the probability to perform well this next week, along with some other ones in here. So great email this week, thesimpleside.substack.com. Go check it out. Go subscribe. It's a great newsletter. We're performing very well this year, and I look to continue doing so. We'll talk to you later.